Hello, and thank you so much for joining us today. My name is Erica Palmer, and I have the great privilege of serving as the Executive Director of the Independent Restaurant Coalition. We are very excited today to host members of the Small Business Administration to discuss the Restaurant Revitalization Fund and the application process. I know you all have tons of questions. Please use the Q&A panel on Zoom. You'll find it at the bottom right-hand corner of your screen to ask questions, and we'll do our very best to get all your questions answered today. If we don't, you will find many of the answers to your questions posted on saverestaurants.com on our resources page, and we'll keep updating that frequently. I'm going to get this call started quickly. I know you all want to hear much more from our panelists than from me. So with that, I'm going to turn the mic to IRC Advisory Board member and co-owner of Lucques in Los Angeles, Caroline Styne, who is going to talk a bit more about the IRC's efforts over the past year and introduce our guests.
Hi, as Erica just noted, I'm Caroline Styne. I'm the co-owner of the Lucques Group in Los Angeles and a very proud member of the advisory board of the Independent Restaurant Coalition. Over the past year, the IRC and neighborhood restaurants and bars have mobilized a grassroots movement to educate, inform, and work with members of Congress to inform them about the unique needs of our industry and the need to save us from what was clearly going to be an extinction event. We were extremely fortunate that we had people on both sides of the political aisle who understood how important our industry is to our culture, our communities, and also to the economy as a whole. And finally, after a long year of advocacy, President Biden signed a $28.6 billion grant fund designed to help struggling restaurants and bars into law. And since the passage of this bill, we at the IRC have continued to advocate on behalf of restaurants to make sure that the grant fund is implemented quickly, and most importantly, that it's accessible to all. An example of this was a few weeks ago when we asked that the grant application program for the restaurants and bars not include the cumbersome sam.gov registration requirement. The SBA listened and they removed this complicated process from the application because they knew that this was something that was going to prevent too many small businesses from being able to access these funds. If you don't have advisors, lawyers, or English literacy, you were clearly shut out from this program. The Small Business Administration, led by Administrator Guzman, has spearheaded an effort to make this program as accessible to our industry as possible. And because of this, and trying to ensure that struggling businesses can access this program, they're allowing that point of sale vendors can partner with their restaurants to help them create the data they need to apply for the funding and help them start their applications. It's clear that the SBA and the Biden administration care deeply about protecting the small businesses that have been harmed so tragically during this pandemic. We're grateful to the Biden administration, Administrator Isabella Guzman, Associate Administrators Patrick Kelley and Julie Verratti, and the entire Small Business Administration for working with us to stand this program up quickly and effectively. I know my restaurant and thousands of businesses in our community will be able to keep our doors open because of the SBA's effort. I'm going to hand this over to another member of the IRC team, a member of our leadership team. She's the owner of the Ivy Kitchen in Detroit, Michigan, Nya Marshall.
Thank you so much, Caroline, for that introduction. Again, my name is Nya Marshall. I am the owner of Ivy Kitchen, located in Detroit, Michigan. I just have a few words for you. The grant relief program will allow restaurants and bars across the country to keep our doors open, while many of the other federal relief programs have failed to provide adequate support. My restaurant alone lost over 85% of our revenue last year, like many other restaurants. I was not able to access any of the federal relief funding in the programming. The Restaurant Revitalization corrects many of the shortcomings of the past federal relief funding, which will keep many of the BIPOC community from receiving much needed assistance. During the initial stages of the Paycheck Protection Program, only 130 Black-owned restaurants received PPP loans in excess of $150,000. 130. Less than 0.25% of all loans awarded. At least 13% of small businesses are Black-owned. During the initial 21-day period, the Small Business Administration will prioritize many of the businesses that previously received federal that previous relief programs forgot. Many businesses are controlled by women and veterans are socially and economically disadvantaged in many of the federal relief programs. In this program, we will receive a priority, a 21-day priority during the initial stages of the program. These provisions will give traditionally disadvantaged business owners the opportunity to receive the relief needed to survive the pandemic. I'm grateful for the IRC community and the SBA for dedicating themselves and ensuring that the least connected and the most disadvantaged businesses benefit from this grant program. Now that the $28.6 billion in relief is close to being made available, restaurants and bars need to get their application materials in order. I'm reaching out to everyone in my network, everyone I know in my neighborhood restaurant and bar community, and making sure that they're ready to submit their application on day one, the day the portal opens. Everyone participating in this town hall needs to spread the word. Everyone needs to spread the word and direct operations in their networks to the IRC resource page so that every business that needs grant relief can access it. I would now like to introduce Associate Administrator of the SBA, Patrick Kelley.
Thank you, Nya. It's great to be here with IRC. Thank you to Erica and everybody from IRC. We've had great, very productive discussions with your group, and we feel like the program is the better for it. My name is Patrick Kelley. I'm the Associate Administrator for the Office of Capital Access for the SBA. I do bring greetings from our Administrator, Guzman, who before joining the administration, stood up a grant program in the state of California. We have worked together in the past under the Obama administration. She is a tremendous leader. She's a person who rolls up the sleeves and likes to get things done from an operations standpoint. So I think we're in the position we are today, shortly after the bill's passage in March 11th, on the precipice of opening because of her leadership. And so just hello from Administrator Guzman, and my hat's off to her. But we do have somebody also from our team that Administrator Guzman hired, who is one of your own, a owner and operator of Dennison's in Silver Spring, Maryland, and now a member of the Biden-Harris administration, and someone who I can personally attest, quote unquote, gets it. She has been a tour de force as a one-woman focus group representing your interests and how we develop the policies around this platform. And it's an honor, and I am humbled to introduce her, and I'm excited to work with her through this presentation so we can get you guys the information and you can get it to everybody out in the country. So with that, I will turn it to my colleague, Julie Verratti.
Thank you very much, Patrick. Thank you, Erica. Thank you, Nya. Thank you, Caroline. Thank you all for being here today and taking the time out of your busy day. I appreciate you wanting to listen to some government hats when you could be out there, making revenue so you can pay your bills. And we are hoping that today we're able to get you some much needed information as we prepare to launch the Restaurant Revitalization Fund. And that's our goal, is to just try to get you guys the information you need so you can be prepared. Nya, I really appreciated you saying that folks should be telling everyone they know. It is really important we get the word out so that we are getting to the smallest of the small, the underserved communities, so that folks have access to these much needed funds. So with that, let's get into the nitty gritty, Patrick, so we stop wasting people's time. So I'm just gonna, I guess we'll just go back and forth and try to answer kind of an overview of everything. And then I assume we'll have some time after you and I talk everyone to death. And then we'll hopefully answer some specific questions. And I know that a lot of folks have submitted questions ahead of time, and I want to say thank you for that. Please keep funneling those questions to the IRC. It is helping us create a better program. One of the reasons why we have been able to work so closely with the IRC and other stakeholder organizations is because our leadership in Administrator Guzman has been adamant that we meet businesses where they are. And when we work and develop policy, that we are doing it in the world of reality and not in a vacuum. And so you guys have been instrumental in helping us make a better program. And I want to say thank you for that. All right. So, Patrick, who's eligible for this program? What type of entities? Can you let us know?
Sure. So obviously restaurants. So the first, hence the name Restaurant Revitalization Fund, but it also includes food stands, food trucks, food carts, some of my personal favorite, just as an aside, caterers, bars, saloons, lounges, taverns, snack and non-alcoholic beverage bars, which can include, for example, coffee shops and ice cream shops. I like those as well. Bakeries, brew pubs, tasting rooms, tap rooms, breweries, microbreweries, wineries and distilleries, and inns, and licensed facilities or premises of a beverage alcohol producer where the public may taste, sample, or purchase products. And again, I want to just echo Erica's comments. I believe it might have been Caroline's, that applicants do not need to be registered in SAM.gov, and SBA will not require a DUNS or a CAGE identifier. And I do want to thank Congress for that. They were very deliberate in the authorizing language, instructing the administrator to meet you where you are in terms of your unique identifier. And Administrator Guzman gave that direction. So thank you to IRC, thank you to Congress, and you do not need to register in SAM.gov and will not require a DUNS or CAGE identifier, because this is not the Government Contracting Revitalization Fund. It is the Restaurant Revitalization Fund. Julie?
Thank you, Patrick. All right, next question for you. Can you give a sense of entities that aren't eligible? Sort of, how many locations do they have? Are they public traded company? That type of information.
Sure. So first off, you need to have 20 locations or less in terms of the amount of locations in this program as a general framework of size standard. State or local government operated businesses are not eligible. So I'm going to be talking about the businesses that are not eligible. If you have a pending application for or have received shuttered venues operation grant from the SBA, then you are not eligible for the Restaurant Revitalization Fund. As Julie mentioned, if you're a publicly traded company, you are not eligible for the Restaurant Revitalization Fund. If you are permanently closed, and I'll let maybe Julie just comment on that in a second after I just round out the list. If you are a nonprofit organization, you are not eligible. But maybe Julie, just a comment from you on permanently closed.
Yeah, absolutely. Because it is definitely, well, what does that mean? It does not mean temporarily closed. So we understand that during the pandemic, there have been a lot of restrictions placed on restaurants in terms of how you can operate. You only can have outdoor seating, or you're at 25% indoor seating. In some cases, restrictions were lifted and then they've been restricted again. And so, it's my understanding that Michigan just went to only outdoor seating in the past few days. And so temporarily closed means if you had to make a business decision that it doesn't make sense for your doors to be open because of those restrictions, because you're going to end up spending more money by opening your doors, that's temporarily closed, because these funds would allow you to then get your doors open eventually when you can actually operate. I mean, again, this is this fund is for profit businesses, and so if you have a small restaurant and 25% capacity means you've got 2 customers at a time, but you're still paying your back of house, your front of house. You will probably be losing money based off the revenue you'd bring in. So we wanted to make sure businesses that had to temporarily close are still eligible for this program. So that's what that means.
Yeah, and to that end, Administrator Guzman, again, because she's kind of lived this the last year as the small business advocate in California, the statute called for a covered period through 12/31/2021, but gave her the discretion to extend that covered period, which covers the time of period where you need to use the eligible proceeds by. Otherwise, if you do not use the eligible proceeds entirely before the end of the covered period, you would need to remit funds back to the Treasury. So because of that uncertainty, because of who she selected in Julie, the administrator has chosen to extend out to 2023 as the statute allowed her the discretion, recognizing the start and stop and the bizarre, unfortunate nature of this virus and what it's done to our society. So if she were here, she would tell you that she wants you to have certainty on that. So that has already been extended from the beginning.
Yeah, and I actually think that's one of the best decisions on this. Instead of having to extend another 6 months, it has been exhausting running a restaurant over this last year. It's exhausting prior to this past year to run a restaurant. And so the constant pivoting, this is just one way that it's going to prevent another pivot that you'll have to deal with. Patrick, can you talk a little bit about, say you own a franchise, you're an independently owned and operated franchise operator, and then also what's the situation with like someone who is filed for bankruptcy? Can you talk a little bit about those two things in terms of how people are eligible?
Yep, I can. So franchises, independently owned franchises they are eligible. So quick service restaurants, et cetera. So as many people know, the SBA and its capital access programs that I oversee supports the franchise community. So you're in. With respect to bankruptcy, if there's been a liquidation, then that would be permanently closed and you're out. But if you're working under a reorganization plan, you are in. Does that answer your question, Julie?
It does. Thank you. All right, let's move on. Let's talk about what are eligible expenses. What are the things you can pay for with these funds? Do you mind just listing some of that, and we can kind of go back and forth. In case you missed something, I'll make sure I'll hop in and round out the answer.
Yes, I know you will. So the basic premise here. So let me take a step back because I know Julie concurs with this. The basic premise of this program and the guiding principle is as much relief to as many businesses in a short amount of time. Okay. So when we think about eligible use of funds, we're talking about business operating expenses. So that includes, payroll, utilities, maintenance expenses, construction of outdoor seating, supplies. I'll let Julie amplify this because she actually knows what she's talking about with running a business. But the thing that I know a little something about coming from banks is business debt. So principal and interest payments for your business mortgage, if you have owner-occupied real estate, is an eligible expense. But what is unique to this program and consistent with that framework that I discussed, that overarching principle of the most amount of relief to the most businesses in the shortest amount of time, is that business debt service, both principal and interest, will be eligible. Now, the one thing that you cannot do is prepay, but you can set aside funds to service ongoing debt. That includes SBA debt, EIDL debt, credit card debt, other types of debt. So that is a key distinction. And I'll let Julie just amplify some of the other things that I know will be of interest and unique to restaurant owners.
Yeah. So obviously you can pay rent, triple net or otherwise. All of those expenses are part of this. Operating expenses. So basically anything that you have to pay for to operate your business is covered. So your insurance, your fees, your licensing, your POS contracts, your POS equipment. If you are an entity that is within that beverage, alcohol manufacturing space, your cost of goods sold, all of your raw materials. So your malts, your hops, your yeast, utilities are covered as well. And again, utilities that you have to pay for in the ordinary course of your business. So your CO2 contracts, if you have those, on top of, gas, electric, water, et cetera. And so these are all the things that go into that bucket of eligible expenses. Let's see.
Julie, before you move on,
Yep.
could I ask a clarifying question
Yes.
around eligible expenses? So you mentioned earlier, Patrick, that the timing of the grant program had changed a little bit. So if I receive a grant, I can use this money on my eligible expenses that have been incurred starting from when and ending when?
So, Julie, can you?
I'll answer it.
Yes,
I'll
please.
answer it.
All right.
All right. So this statute recognizes that the date certain for when the COVID injury happened is February 15th of 2020. Okay, so all of these expenses that you have accrued, it's from February 15th of 2020, and then you have all the way through March 11th of 2023 to spend those funds. Does that answer your question, Erica?
Yes, thank you for the clarification.
Yep.
Yes.
Thanks for asking.
And the reason I was slightly distracted during Erica's question, I appreciate my colleague bailing me out on that, was that Erica, on behalf of IRC members, asked a question today about depreciation from an accountant as whether operational expenses included that type of maintenance expense, and it does. It does not allow you the bonus accelerated depreciation of that. But you can include that as those maintenance expenses in your operational expenses. So I wanted to highlight that because that's a question that came in this morning from Erica and representing somebody from IRC World. And so keep the questions coming through your trade group because we are making use of them. Next, Julie.
Okay. We talked about when you have to spend the money. We've talked about what bills are covered with the money. We've talked about who's eligible for the money. How do we calculate the amount of money people could potentially get? Can we talk about the calculations?
Yes, we sure can.
Great.
And let's also pause for a second because I am a lawyer. So if the math gets a little bit off, Julie, the business owner, will keep me straight. So calculation one, which is the one I like the best because it's the easiest. And then I'm going to defer to my colleague on the more complicated math part of this equation. So calculation one is you've been in business prior to January 1, 2019. You've been in operation. And so you're going to take your 2019 gross receipts minus your 2020 gross receipts, minus your PPP loan amount. When you come into the web application or work through your point of sale vendor application or a third-party restaurant ecosystem partner, and we'll come to that in a minute, that PPP loan amount will be matched for you in the system. But we will ask you to have that PPP loan number available. So it's more helpful if you do, but we will be identifying those funds and backing that out. So I'm gonna let Julie do calculation 2 and calculation 3, which is the actual heavy lifting. And I think also speaks to her understanding of meeting you where your situation truly has been over the last year. So go ahead, Julie.
Thanks, Patrick. And just to repeat that, for the calculation one, what was your gross revenue in 2019? Minus your gross revenue in 2020, minus your triple P amounts, if you received any. So calculation 2. This is if you partially, and it's a little complex, and this is why Patrick is giving this to me. If you own a business that opened your doors sometime in 2019, that was beyond January 1st, so partially in 2019, you have two calculations that you could choose from, building in flexibility. And the reason why is that we understand that businesses that are 2 years and under in terms of length of time being established and opened, you're at your most vulnerable. And so like we built in flexibility with the forgiveness application for PPP, we wanted to build in flexibility for this fund as well. So you can choose one of the two following calculations. The first is take your average monthly gross receipts that you earned in 2019 and then multiply that number times 12 to get a number as if you were open for a full year. That's your starting number. And then you minus whatever your 2020 revenue was, and then you minus whatever PPP amount you may or may not have received. And the answer to that calculation would be your potential grant amount. So again, that's for businesses that opened partially in 2019. Calculation 3, which is the calculation that businesses will use if they've opened their doors in 2020. And again, people who opened in 2019 can choose to use this as well. It's going to be your business decision, whatever is best for your business, which I imagine would be whichever calculation gives you the biggest amount of potential funds. So the calculation 3 is you add up all of the eligible expenses that you incurred between February 15th of 2020 and March 11th of 2021. And the reason it's March 11th, 2021 is because that's the day this law became enacted. So that's your window of time. All of those eligible expenses that we've already listed for you in this presentation, those are eligible expenses that you add up, figure out what was the full amount that I paid for all of those expenses. That's your starting number. And then you minus out your actual 2020 revenue and minus out PPP if you received it. And we recognize not a ton of businesses that opened their doors in 2020 had access to PPP. But if you did, you'd have to back it out. So the reason we wanted to have that flexibility where if you opened halfway through 2019 or midway or whenever you did, is because say you opened, the end of December and you had 3 days to calculate that 2019. We wanted to live in, the reality of which you guys are experiencing. We recognize that this is a capital intensive industry. It takes a lot of time to get your doors open. You've got the build out, you've got the lease, you're dealing with contractors, you're dealing with permitting and fees and getting your licensing together. So recognizing that the time horizon in terms of when you get your doors open, there are folks who signed their lease and started their build out in 2019. And then March of 2020, the world flips over. But you still needed to open your doors because you just put in hundreds of thousands, if not millions of dollars into your build out. So that's how you get those calculations. Erica, did you have a question about that?
Yep, we're going to stay here for a minute. This is the most frequently asked question I get. So I want to just go over them one more time.
Got it.
And then ask a follow-up question.
Great.
So if I opened before 2019, I calculate my grant amount by taking my 2019 revenue, subtracting my 2020 revenue, subtracting my PPP. That's my grant amount.
Yes.
If I opened in 2019 at any point of the year, I am taking the average monthly revenue, multiplying it by 12 and subtracting actual gross receipts, not an estimate of gross receipts.
Yes, actual gross receipts from 2020.
And then I'm subtracting my PPP and I have my eligible expenses.
Exactly.
Yep. If I opened in 2020, I could use the 2019 model. No.
Nope.
Okay.
Sorry. So clearly I was not speaking coherently. Sorry.
So if I open in 2020, I'm going to use all my eligible expenses from February 15th of 2020 through March 11th of 2021. Then I'm going to subtract any revenue I made. You specifically said 2020 revenue. We're not subtracting any revenue that was made in those first 3 months of 2021.
Great question. I'm going to let Patrick take this one, mostly because I don't know if I'll give an accurate answer.
Yeah, you can say that you need to get back to us if you'd like.
We can also do that. Just
yeah, I mean, I would say that we'll clarify that, but the intent is to back out revenue. So I presume that it is going to be backed out, but we'll come back to IRC with clarity. And this is in part why we're doing these sessions ahead of program launch, to get feedback and make sure we have clarity. I also want to just echo your question, Erica, which is applicants that began operations partially in 2019 may choose to use calculation 2 or calculation 3. And I'll also point out that Nicola Montagna, who is the project manager lead on this project, and keeps Julie and I in line, is texting us furiously to say no, 2021 revenue will not be backed out. So there's a person that's smarter than us on the team, and also a big fan of ice cream. I just want to shout out for that.
So I'm going to go through this one more time, Patrick, just so we're super clear, because it's probably the most important thing, one of the most important things we're going to talk about today.
Yep.
So if I've been open before 2019, it's easy. I take my 2019 revenue, I subtract my 2020 revenue, I subtract my PPP, I have my grant amount. If I was open in 2019, I take my average monthly, I multiply it by 12, I subtract my gross receipts from 2020, I subtract my PPP, I have my grant amount. If I opened in 2020, I can take my eligible expenses incurred between February 15th of 2020 and March 11th of 2021. I back out my 2020 revenue. It didn't receive a PPP, so that's my eligible grant amount. If I opened at the very end of 2019, I can use the 2020 model.
Yeah,
Yes.
If you began operations partially in 2019, you may choose to use calculation 2 or calculation 3, correct?
So how do we define partially?
If you opened your doors on January 2nd of 2019, you did not operate for the full year because you were not open on the 1st.
Yeah, so you have a choose your own adventure, again, consistent with max amount of funds, most amount of business, short amount of time.
Okay, this question may throw you for a loop too. I was planning on opening in 2021, but the pandemic kept me from opening. So now I'm opening in 2021. So I was going to open in 2020, couldn't open. Now I'm hoping that my doors open in 2021, but they have not opened yet. Am I eligible for this program?
Well, this is how you know. Did you spend any money in your endeavor to get your doors open by or on March 11th of 2021?
So if I spent money, but I wasn't able to open my doors, then I'm eligible.
Yes.
Okay. I think you probably, if you could hear the audience, they'd probably be cheering right now.
That was Nicola's idea. So, but we'll take credit for it on this right now.
Terrific. Thank you for the clarification on that very important section. I can continue to ask you more questions, or I can let you all keep going back and forth. Your preference.
I don't know if you have other areas, Julie, to finish. And then
I would say we should probably talk a little bit about the 21, like the priority groups. We could just go into that a little bit and then open it up for fuller Q&A. Does that work for everyone?
Yeah.
Go right ahead.
Great.
So couple things on this. First, I want to also thank Congress for giving us the flexibility under this statute around those calculations that we just went over. So, hats off to them to have the foresight. The other thing, echo Nya's comments from the opener. First about the unfortunate outcomes related to other relief programs that preceded this, particularly in underserved communities. And hats off to Congress for listening to that and taking steps, as Nya suggested, to rectify that. So this program, as Nya outlined, gives prioritization within the first 21 days once the program launches for prioritizing application review and funding to businesses that are women-owned, veteran-owned, and socially and economically disadvantaged individuals. Now, that is a framework that is used in the federal government contracting space. And so there are normally certifications that you obtain, for example, with veterans at the VA, or for example, socially and economically disadvantaged individuals through an 8A certification at the SBA. You are not required to have those formal certifications. This is a self-certification process. You know if you are a veteran, and I would suggest to anyone out there who is thinking, well, I'll slide through on that one, I would point them to a YouTube video of then Representative Duckworth, now Senator Duckworth, excoriating someone who lied about their service-disabled veteran-owned status. So we don't want any of that, but you will self-certify to that. There is no documentation that you need to provide. You will be self-certifying and attesting that is accurate. But in terms of those thresholds, it's 51% or more ownership. And so now Erica's getting panic city and saying, you don't understand, government contractors are all set up for that. It's restaurants, the equity ownerships aren't the same. Patrick, please, dear God, I hope you listen to Julie. And I did. So Julie, explain to us why we have adjusted those rules to meet the restaurant owners where they are.
Thanks, Patrick. So understanding that in the restaurant world, and when you create your businesses and you're figuring out equity in terms of ownership, you're not thinking, oh, I need to have one person who is 51% so that I can certify for this program that's within the government contracting space, right? So instead of doing that, which is what those rules sort of call for, we are doing, for lack of a better term, a mix and match approach. And so a clear example would be if you are a restaurant entity or an eligible entity within this fund, say you have 5 owners, each owner has 20% equity. 2 of the owners are veterans. One of the owner is a woman, and the other 2 are not within those groups. That would be a 60% ownership between veteran and women that gets you over that 51% threshold. And so it's equity across the board, whether it is your majority managing member general partners that are working every day, or it also includes your silent partners. I know a lot of restaurants, when they get open, do friends and family. It's capital intensive. You have a lot of folks that own the company. And so that's how we created that program. So as long as you have folks that are within your equity framework, gets you above that 51%, you can certify that you are owned and operated by members of that one of those priority groups. Erica, you have any questions or flags on that?
Gosh, I have so many.
Okay.
I think we just need to answer a couple of questions in terms of process. So I appreciate that you've identified that let me parrot this back to you and we'll go that way. What I think I heard you saying, Julie, is that when I apply, I'm going to list all of the members that are owners of my organization, anyone that owns more than 20%, and then I'm going to add up the individual elements to see if I fit into that priority bucket.
Correct.
Okay. So there's still a question, what the heck is a socioeconomic disadvantage? So when we're saying this is a priority,
I'm gonna read something out loud right now. So,
terrific.
Okay, let me get to it.
Will music accompany it, or will you just be
Only if you're singing, Patrick?
Okay, all right, very good.
You can hum the background music, Patrick.
Mm-hmm.
Okay, so a socially disadvantaged individual are those who have been subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. Individuals who are members of the following groups are presumed to be socially disadvantaged: Black Americans, Hispanic Americans, Native Americans, including Alaska Natives and Native Hawaiians, Asian Pacific Americans, or subcontinent Asian Americans. Economically disadvantaged individuals are those socially disadvantaged individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the same business area who are not socially disadvantaged. And what I just read to you is part of the statute. that defines. This is not something that Patrick and the team made up. This is literally because it was in the statute of the Restaurants Revitalization Fund. This is what Congress said we needed to use in terms of that definition. So that's what I just read to you.
Yep.
Thank you for the clarification.
In addition, I think, and Nya touched on it as well, which is size of loan was also kind of a point of critique in PPP, and this administration, as well as the set aside periods for PPP in phase 3 that Congress put forward, focused on attempted to focus on the smallest of the small businesses. And so we thank the IRC and other trade associations for all of these different eligible entities that we've spoken to, because we've gotten good feedback on how do we, in addition to the prioritization folks that were identified in the statute, how can we think about the funding set-asides related to the smallest of the small? So, as you know, Erica, the statute calls for $5 billion to be set aside for applicants with 2019 gross receipts of not more than $500,000. We also have an additional $500 million set aside for applicants in 2019 gross receipts of not more than $50,000. So by anybody's definition, the smallest of the small. And then an additional $4 billion is set aside for applicants with 2019 gross receipts from $500,001 up to $1.5 million. And probably at this point, I just want to say that with respect to those set asides and so forth, everyone should apply day one. So echo Nya's comments of let's get the word out and everyone should apply. $28.6 billion is a lot of money, but it is not nearly enough, arguably, to meet the demand of if you took the delta of this industry and related industries and, from 2019 to 2020. That number is probably, I think Congress was pegging it, at like 120 billion, might be north of that. It's immaterial exactly what the number is, other than to say that in all likelihood, there will be, like there was at the end of phase 1 in PPP, applications that are eligible that may not be funded. And that'll just mean that, folks at IRC and Congress and the administration all need to talk and see, do we want to fund those as a country? And we'll, obviously make a choice as a people. So, but that is going to be helped. That debate and that advocacy is going to be helped by people applying, and not, sitting on the sidelines because you're concerned you may not. One thing that I did want to point out as well is that is how you apply. So there will be a web application at restaurants.sba.gov. It's not active yet, live yet. However, it will be shortly. As we mentioned, there will also be ecosystem partners who the SBA will be publishing an application program interface for the application to be embedded in software as a service companies' applications. For example, Square, Toast, Clover, Aloha. Point of sale vendors and restaurant ecosystem partners can take that and utilize it to facilitate their customers in submitting applications. And we did that because we know that data, that point of sale data, is incredibly valuable to obviously determining the calculations that Erica went over. And finally, for those that may be not able to watch this Zoom webinar through the internet, but maybe are dialed in through their phone because they're in a broadband challenged area, there will be the ability to apply telephonically. to do that. So I did want to mention that. Julia, I don't know if you wanted to clarify anything that we might have missed earlier.
Yeah, and I apologize. I had screwed up and typed you a message that I think gave you wrong information when you said something. So that's my bad.
Okay.
Just clarifying, Erica, the question about the years in which revenue will count towards gross receipts. For calculation 1, it's only 2020 gross receipts. For calculation 2, it's only 2020 receipts. For calculation 3, there will be 21 gross receipts added to that. So just wanted to clarify that. I apologize for that miscommunication.
Thanks for the clarification. We only have you all for 8 more minutes. Is it okay if I ask you the top 3 questions that are rolling in?
Fire away.
Sure.
Fire away.
You know what the first one's going to be?
Yeah.
How soon can I apply?
Oh, I was going to go with why is Julie so great, but yes.
That's not a question. That's a statement of fact. Julie
that's
is
a statement
great.
of fact. All right. So how soon can you apply? So soon, which is a dissatisfying bureaucratic answer, which everybody is puking on in the chat room right now. We are in the final stages of working across the government with the different interested parties to make sure that everybody feels confident about this program, so that we're getting the money out the door fast, but we're doing it responsibly. There is a process to make sure that we run those traps. People are working night and day to run those traps. So we hope to come back to you very shortly and do this. When we do, we anticipate there's going to be a period of time for these trainings to continue before the applications are eligible to be submitted. And we will also be making use of a pilot period. And the pilot period will enable us to test the technology instance that we've stood up for this. That's a practice that every single commercial entity in the world that launches a technology project does. We will be randomly selecting individuals, business owners who have self-identified as veteran, minority, or woman-owned on their PPP applications. And we will allow them to help us break the system during that pilot period so that we can, when we go live 7 days after, we'll have a pilot period for 7 days. And then when we go live, we hope that their ability to break the system, give us feedback, will make the experience better and make the system work. They will not be funded. So there will be no funds given to anyone from that priority population during that. It's optional to participate. So if folks get an invite from us, again, randomly selected from self-identifying as minority, veteran, or woman-owned from PPP loans, we will do that. So that's a little bit about the timeline. So we anticipate about 2 weeks from the time we post the application and supporting materials related to the application, which that 2-week period will include the pilot, and then we will have a launch date. So I think it's really important for this community to continue to make folks in DC, in the administration and on the Hill, conscious of the need to get these dollars out the door, because we know it's important to you. We are listening and we are working around the clock with our partners across the executive branch to get this thing out the door.
Thanks, Patrick. I know that's a tough question to answer, and I know that a lot of these things are within your control and a lot of them are beyond. And so we appreciate your honesty and directness in answering that question. Obviously, we're pushing everybody to apply on day one. One of the things that will really help people apply on day one is knowing what documentation they should get together right now. Could you or Julie elaborate on what sort of documents I can use? Yep. Let's say I'm not applying through my POS. What documents do I need to put together to prove my revenue, or in the case of a 2020 restaurant, my eligible expenses to determine my grant amount?
Tax returns is number one. 2019 tax returns, 2020 if you have them. Bank statements, profit and loss, income statements. The ideal world, you would have tax returns for both 2019 and 2020.
So if you file for extension, you are not precluded. There are other forms of documentation that Julie highlighted for that 2020 number, but it would behoove you to do so because it will expedite our ability to move more swiftly and reliably, validating that particular information. So we are going to require you to authorize us to verify through IRS the Form 4506T, which will be completed and signed by the applicant, and that's a validation of tax information as part of the process. That'll all be embedded and inline in the web application. So you can authorize that through the DocuSign e-signature, for example. So those are some of the types of documentations, and what we're documenting just at a top level is the gross receipt numbers. So it's a very basic review. This direct payment process is a very basic review. Obviously, I'll use the easy one for my simple lawyer mind math: 2019 gross sales minus 2020 gross sales minus PPP. So obviously, we want to review and validate 2019 gross sales and 2020 gross sales. So these documents enable us to do that. You do not need to provide all of those documents. You need to provide those documents that demonstrate the inputs that you put into the application related to the calculation.
Terrific. Thank you so much for that. We just have a minute or so more left. So I'm going to take that minute to remind folks that I know we didn't get to your questions. There are, I believe, 400 of them in the chat right now. Mm-hmm. We will do our best to get those answered and update the information at saverestaurants.com. And I know that very soon we'll start to see guidelines and other information posted on the SBA site. The moment we do, the Save Restaurants page will also point you there. So please do continue to visit saverestaurants.com, and we'll update the information based on everything you heard here today. And we'll also pass along all of your questions to Julie and Patrick so they can continue to answer them. And I have 3 big asks of everybody on the call. I want to ask you to please get ready to apply for this. We know it's not enough money, and we know the only way we're going to demonstrate that it's not enough money is if you line up and ask for it. So please prepare to apply on day 1. Although the applications will be prioritized in receipt, we also heard very clearly from Julie and Patrick today, you need to apply on day 1. Second thing I'd like to ask you to do is tell a friend, tell your community, reach out to somebody that isn't always on Zoom, reach out to somebody that's your favorite small place to go grab a bite after a shift. Let them know that this funding is available and make sure they have the tools they need to apply as well. And third, please keep in contact with your representatives. It was your voices, your grassroots effort is what made the Restaurants Act possible. We need to keep telling your stories. You need to keep letting your representatives know how your businesses are doing, what you're struggling with. It's your voices that will allow us to continue to work as your advocates and to help Patrick and Julie deliver a program that will meet your needs. So those are my 3 big asks of you. And I want to thank everyone for joining us today. I particularly want to thank Caroline and Nya for joining us and sharing information about the IRC and why this program is important. And of course, Julie and Patrick, we are so incredibly grateful for your presence, not only today, but for continuing to listen to the needs of these small independent restaurants and making sure that a program is built that will help us. And as you said, meet us where we are. So thank you very much for joining us today and your continued leadership. You are truly not just saving businesses, you're saving lives. Thank you all and have a great day.
Thank you.